It's been a banner week for the tech space, the sector hitting all-time highs again today as NVIDIA pushes even further above its record $4 trillion market cap. Joining me now to discuss Intelligent Alpha founder and CEO Doug Clinton. Doug, good to see you. I mean, obviously, that's a landmark. It's obviously representative of just the sheer massive economics that are flowing in NVIDIA's direction. But I wonder, to kind of weigh in on what we were just talking about with the prior panel, which is, you know, where we are in this process of all these other tech platforms handing their free cash flow for a year or two over to NVIDIA and the market being good with both sides of it.
Yeah, I think we're still, in terms of the AI trade, you think about the long term, I think we're probably still in inning 3-ish. And we've actually been saying it's inning 3 for like 3 or 4 months. So I feel a little bit like the boy who cried wolf.
It's been quite a rally, keeping the inning alive.
But I think we keep seeing these breakthroughs with new models. I mean, Grok 4 just came out. It's performing very well on benchmarks. I think just objectively, too, using it is a step forward, a small step, smaller than we've been seeing, but it's still a step forward. And so I think the market is seeing, on one hand, NVIDIA is powering the brains. Every brain that will be artificially intelligent over the next 5 years will probably be powered by NVIDIA. And on the other hand, the companies that are building these brains, I think they stand to have large cash flow in the future, even though right now they're very much in investment mode.
How much should people concern themselves with which model might win? What's going to be the structure of this business once we finally get to some further state of maturity?
The way that we used to think about it was there were sort of 4 real players to win this model war. There's OpenAI, obviously. There's Grok, Meta, and Google, right? So I think at this point it feels like Meta is a little bit in desperation mode. I mean, Mark Zuckerberg has been out buying a lot of really high-end talent. I think they've thrown out the playbook and they're just reinventing what they're doing. So they're not out of the race, but they're certainly at the bottom of the list now. The other 3, I think, are tightly clustered together. And what's interesting amongst those 3, actually, is Google is the one everybody is sort of assuming will lose. I mean, look at the stock price. It trades at the lowest multiple of all the Mag 7 companies. And so I think the consensus is search is dead. Google's not going to figure out AI. And so don't own the stock. At Intelligent Alpha, our models actually like Google. So it's one of our top 10 holdings in our Livermore ETF. We also own it in our long-short hedge fund. And so I think Google is the one that is actually sort of interesting to look at here. And even look at it today, it's up with the market kind of sideways. Maybe the narrative is beginning to shift there.
It's definitely a differentiated view to say that they will be a net winner. I just wonder if, even if you believe that they actually have a solid head start in AI or whatever it is, that simply because the search business has too much to lose, people are unwilling to pay up for it.
I think over the next kind of 12 to 18 months, we'll see a lot. We'll learn a lot about how well they're navigating this transition. Like, can they sort of gently land this plane where people are used to 10 blue links, and now they're getting an AI overview and 10 blue links? And can they make that transition where people say, hey, you know what, I actually really like this experience much better? And in fact, it may even be better than OpenAI because I still have some autonomy. I can choose some of the things I see in the search results.
Right. It's not take it or leave it. Here's
that's
the answer.
Right.
What else is your model kind of settling on at this point in terms of what's surfacing in terms of opportunities there?
It's also really like Marvell, MRVL. So they're also in the chip space. It's, as a human, it's one of those stocks you want to pull your hair out owning. So AI doesn't have hair. Luckily, it doesn't have to deal with the kind of craziness. It feels like every week we get different information about how Marvell's dealing with one large customer in particular, which is Amazon. It still seems uncertain what exactly will be the long-term relationship there. But I think when you look at a stock like Marvell in the AI space, relative to many other companies in the AI trade, the stock hasn't really done very much over the last 3 months, whereas many of the other high-flying AI companies are up 50 to 100%.
Yeah, looking at that at the chart right there.
And so I think this is one where if they kind of get anything right, or if they win another customer that markets are not pricing in right now, this is a stock that could work in a big way where other stocks have already worked in it.
And just quickly, is the AI model trying to incorporate all that in terms of the product stuff and customer relationships, or is it just a financial breakdown?
It looks at both, and I think that's what's really important about this new era of AI. The old era of quantitative trading, right? Pre-LLMs. That was really about looking at the financials. And so the large language models are capable of that, but they're also capable of understanding that qualitative aspect. And I think that's what's really important, and that's what we really try to optimize around at Intelligent Alpha.